Let me ask you something really quick. Do you know exactly how much Social Security you are going to receive every single month when you retire? Do you know the one decision that you can never take back that will either add or permanently remove hundreds of dollars from your monthly check for the rest of your life? And do you know about the brand new change that happened in 2026 that the Social Security Administration is not sending letters about? But that could mean thousands of extra dollars going directly into your pocket? If you are not 100% sure about any of those things, then this video was made specifically for you. Welcome to Social Security Simplified, the channel where we take everything the government makes complicated and break it down into clear, simple, and honest information that every American senior deserves to have. By the end of this video today, you are going to understand Social Security better than most Americans ever will. So make sure you watch all the way through, because what I share at the 14-minute mark is something most seniors completely overlook, and it is costing them real money every single month. Before we dive in, let me tell you exactly what Social Security Simplified is all about and why I think you are going to want to stick around. On this channel, we focus entirely on helping American seniors understand their Social Security benefits, retirement rights, and how to make the smartest financial decisions with the money they have already earned. No complicated government language, no confusing financial terms, just clear, honest, straightforward information backed by real data from the Social Security Administration that you can actually use in your real life. Every single week on Social Security Simplified, we publish new videos covering everything from how to maximize your benefits, to avoiding costly mistakes, to understanding what the government is changing right now in 2026. If that sounds like something you need, go ahead and hit that subscribe button and make sure notifications are turned on so you never miss an important update. Now, let's get into today's video. Here is exactly what we are going to cover today, so you know what is coming. Number 1, I am going to explain what Social Security actually is and how the whole system works, in plain, simple language. Number 2, I am going to walk you through the 3 types of Social Security benefits, because most people only know about one of them, and the other 2 could be worth a significant amount of money to you and your family. Number 3, I am going to show you step by step, using real numbers, exactly how the Social Security Administration calculates your monthly benefit. And number 4, I am going to tell you about the most important Social Security update of 2026 and exactly what you need to do about it. There is a lot of valuable ground to cover, so let us get started right now. So let us start from the very beginning. What exactly is Social Security? At its core, Social Security is a federal benefits program run by the United States government. It was signed into law back in 1935, and its original purpose was simple: to provide financial support to Americans who could no longer support themselves through work, whether because of old age, disability, or the loss of a family breadwinner. Fast forward to today, and Social Security has grown into one of the largest and most important financial programs in American history. Right now, more than 70 million Americans receive Social Security benefits every single month. That is an enormous number of people, and every single one of them earned those benefits through years of work. Now, here is something I want you to really understand and remember. Social Security is not a government gift. It is not welfare. It is not charity. It is money that you personally paid into the system throughout your entire working career. When you look at your paycheck, you will see a line that says FICA tax. FICA stands for Federal Insurance Contributions Act. And every single paycheck, 6.2% of your earnings went directly into Social Security. On top of that, your employer paid an additional 6.2% on your behalf. So for every single dollar you earned, 12.4 cents went into the Social Security system. Over a full 40-year working career, The average American worker contributes well over $100,000 into Social Security. This is your money. You worked for it. You paid into it for decades. And Social Security Simplified exists for one reason: to make sure you know exactly how to get back every single dollar that you are rightfully entitled to. Now here is where things get really interesting. And this is something that genuinely surprises, a lot of people when they first hear it. Most Americans think Social Security is only a retirement check you get when you turn 65. But that is actually not the full picture at all. There are 3 completely separate types of Social Security benefits, and depending on your personal situation, you may actually qualify for more than one of them. Let me walk you through each one. The first type, retirement benefits. This is the one most people are familiar with. If you have worked in the United States and paid Social Security taxes for at least 10 years, which equals 40 work credits, then you are eligible to receive monthly retirement benefits from the SSA. The amount you receive depends on 2 main things: your lifetime earnings history and the age at which you decide to claim. I'm going to walk you through the exact calculation for this in just a few minutes. The second type, Social Security disability benefits. This one catches a lot of people off guard. If you have a medical condition, whether physical or mental, that prevents you from working, and that condition is expected to last at least 1 year or result in death, you may qualify for monthly disability benefits through a program called SSDI, Social Security Disability Insurance. In 2026, the average monthly SSDI payment is approximately $1,500. Now here is something that very few people know. If you are currently receiving SSDI benefits, when you reach your full retirement age, your disability benefit automatically converts into a regular retirement benefit at the exact same monthly amount. You do not need to fill out any new forms. You do not need to call anyone. It simply happens automatically. The third type, survivor's benefits. This is honestly the most overlooked benefit in the entire Social Security system, and it could be worth an extraordinary amount to your family. If a worker who paid into Social Security passes away, certain family members may be eligible to receive monthly payments based on that worker's earnings record. This includes surviving spouses, dependent children, and in certain circumstances, even dependent parents. A surviving spouse can receive up to 100% of their deceased spouse's full retirement benefit every single month for the rest of their life. Now think about what that actually means in real numbers. If your Social Security benefit is $2,000 a month and your spouse lives for 20 years after you, that is $480,000 in survivor's benefits that your family is entitled to receive. This is why planning your Social Security strategy is not just a decision that affects you. It is a decision that can financially protect your entire family for decades to come. Understanding all 3 of these benefit types is the foundation of everything else we are going to talk about on Social Security Simplified. So make sure you have a clear picture of all 3 before we move forward. Now, let us talk about the part that almost everyone wants to know. How does the Social Security Administration actually calculate how much money you are going to receive every month? The formula has 3 steps, and I am going to walk you through each one using real numbers, so this is completely clear. Step 1. Your AMI. AMI stands for Average Indexed Monthly Earnings. Here is what the SSA does. They look at your entire work history, take your 35 highest earning years, adjust each year for inflation, add all of those adjusted earnings together, and then divide by 420, which is 35 years times 12 months. The result is your AMI, your average monthly earnings across your 35 best working years. Now here is something critically important that I really want you to pay attention to. If you worked fewer than 35 years, the SSA does not just use the years you worked. They fill in the missing years with zeros. So if you worked for 30 years, they add 5 years of zero earnings to your record, which brings your average down, and directly reduces your monthly benefit. This is one of the most important reasons why working for at least 35 years or replacing low-earning years with higher-earning years later in your career can make a meaningful difference in your monthly check. Step 2. Your PIA. PIA stands for Primary Insurance Amount. This is the core calculation that determines your actual monthly benefit. The SSA applies a formula to your AIME using specific income thresholds called bend points. Here is how the 2026 bend point formula works. You receive 90% of the first $1,174 of your AIME, then 32% of your AIME between $1,174 and $7,078, then 15% of any amount above $7,078. Let me show you what this looks like with a real example. Say your AIME is $4,000 per month. 90% of $1,274 equals $1,057. 32% of the remaining $2,826 equals $904. Add those together, and your PIA, your base monthly benefit, is approximately $1,761 per month. Step 3. Your claiming age. This is the part where your personal decision has the biggest impact, and it is a decision you can never reverse. Your full retirement age, or FRA, is the age at which you receive 100% of your PIA. For anyone born in 1960 or later, your full retirement age is 67. If you claim before age 67, your benefit is permanently reduced. Claim at 62, the earliest age allowed, and your monthly benefit is permanently reduced by 30%. On our example of $1,261, that reduction brings your check down to just $1,273 every single month for the rest of your life. But if you wait until age 70, your benefit grows by 8% for every year you delay past 67. That means at 70, your $1,261 benefit grows to approximately $2,132 per month. Over a 20-year retirement, the difference between claiming at 62 versus 70 can add up to well over $250,000 in total lifetime benefits. Now, I know some of you are thinking, what if I genuinely need the money at 62? What if I have health issues? What if waiting simply does not make sense for me? Those are completely fair and valid questions, and the honest answer is, the right claiming age is different for every single person, which is exactly why our very next video here on Social Security Simplified does a complete deep dive into the 62 versus 67 versus 70 decision using real-life scenarios and real numbers, so you can figure out the exact right answer for your specific situation. Make sure you watch that one right after this. All right, now we have arrived at the moment I mentioned right at the beginning of this video. The update from 2026 that millions of seniors are not aware of. And that could mean real additional money for you or someone in your family. Here is what happened. For many years, there were two rules inside the Social Security system called the Windfall Elimination Provision, known as WEP, and the Government Pension Offset, known as GPO. These two rules were reducing Social Security benefits for millions of Americans who worked in certain government jobs, such as teachers, police officers, firefighters, and other state or local government employees who also received a pension from that government job. In many cases, these hardworking Americans were seeing their Social Security benefits reduced by hundreds of dollars every single month, simply because of the type of job they had. In January 2026, the Social Security Fairness Act was officially and fully implemented. This law eliminated both the WEP and the GPO completely. What that means in plain language is this: if you worked in a government position that came with a pension and you also paid into Social Security through other employment, your Social Security benefit may now be significantly higher than what you were previously receiving. And here is the part that requires your attention. The Social Security Administration is processing these adjustments, but they are not automatically notifying every single person who is affected. If this situation applies to you, or to a spouse, parent, or family member, the right move is to contact the SSA directly. You can reach them by phone at 1-800-772-1213, or you can visit ssa.gov and log into your personal account to review your benefit information. Ask specifically about whether the removal of the WEP or GPO affects your current or future benefit amount. Some people in this situation are entitled to retroactive payments, meaning money owed to them going back to when the law took effect. The only way to know if that includes you is to ask. And that is exactly the kind of thing Social Security Simplified is here to tell you, because this information should be reaching every affected senior in America. And right now, it simply is not. Before we wrap up today, I want to give you one simple but genuinely important action step that I encourage every person watching this to complete before the end of the week. Go and check your Social Security statement. This is a completely free document provided by the Social Security Administration, and it contains some of the most important financial information you will ever read. Your statement shows you your complete earnings history going all the way back to your first job, your estimated monthly benefit at age 62, at your full retirement age, and at age 70, your estimated survivors and disability benefits, and any potential issues or gaps in your record. Here is how to access it. Step 1. Go to ssa.gov. Step 2. Look for the button that says My Social Security and create a free personal account using your name, date of birth, and Social Security number. Step 3. Once you are logged in, navigate to your Social Security statement and review it carefully. Now, here is why this matters so much. Errors in Social Security. Earnings records are more common than most people realize. If a past employer reported your wages incorrectly, or if earnings from a certain year were not properly recorded, those mistakes directly reduce your monthly benefit, and the SSA will not catch those errors for you. You have to find them yourself. If you do find a discrepancy, you can dispute it by contacting the SSA and providing supporting documents such as old W-2 forms or tax returns. One corrected error in your earnings record could add meaningful money to your monthly benefit for the rest of your retirement. 10 minutes on ssa.gov today could genuinely be worth thousands of dollars over your lifetime. Please do not skip this step. Now, before I wrap up, I want to ask you something directly, and I genuinely want to hear your answer in the comments below. Here is my question for you. How old are you right now? And have you already started claiming your Social Security benefits? Or are you still in the planning stage? Drop your answer down in the comments. I personally read every single one. And your situation might actually inspire one of our upcoming videos here on Social Security Simplified. Also, if you found this video helpful today, please consider sharing it with a friend or family member who is approaching retirement age. You will not spend a single dollar doing it, but you could genuinely be helping someone make a smarter decision about one of the most important parts of their financial life. Let me quickly bring together everything we covered in today's video. Social Security is a federal benefits program funded by the FICA taxes you paid throughout your working life. It is not a gift from the government. It is money you personally earned and paid into for decades. There are 3 types of Social Security benefits: retirement, disability through SSDI, and survivor's benefits. And each one can provide meaningful financial support to you and your family. Your monthly benefit is calculated using your 35 highest earning years, and the age at which you claim can permanently increase or decrease that amount for the rest of your life. And the Social Security Fairness Act of 2026 means that millions of Americans, particularly former government employees, may now be entitled to higher benefits and should contact the SSA to make sure they are receiving everything they are owed. Now, here is what I want you to do next. Number 1, if you have not subscribed to Social Security Simplified yet, Please do that right now by clicking the subscribe button and turning on your notifications so you never miss a new video from this channel. Number 2. Go check your Social Security statement at ssa.gov this week and look carefully at your earnings history for any errors or discrepancies. And number 3, click on the video showing on your screen right now, which is Video 2 in the Social Security Simplified series, where we go deep into the single most important decision of your entire retirement, claiming Social Security at 62 versus 67 versus 70, with real numbers, real scenarios, and a clear answer for different situations. Thank you so much for watching Social Security Simplified today. I will see you in the next video, and always remember, you worked your whole life to earn these benefits. Now it is time to make sure you receive every single dollar that belongs to you.